I'm getting a laugh out of this. So I clicked on 3-day because somebody from the live stream tells me to look at 3-day. I believe it's the Cool Victor, but I keep making these jokes about how every type of cross of the moving averages is bearish, and it just seems like that's the case. So if you look at the 3-day moving average, or excuse me, the 3-day chart, we just had a yellow cross below the blue, and that's bearish, right? So that is bearish. The 100 or the 50 moving below the blue, the 50 moving below the 100 is definitely bearish, right? Problem here is when the 50 moved over to blue, we were still bearish. So here's another one of not a golden or a bearish cross, just a cross in general, right? Yellow crosses over blue, we'll say bearish. Yellow crosses below blue, still bearish. We have it here again. Yellow crosses below the blue, which is basically what we just had. So this is interesting because a lot of us are trying to find out where we're at in terms of are we comparable to the summertime, and you did have a similar move here where the gold crossed below the blue and the bearish drop had already occurred. So after that, we actually moved higher. So yellow below blue actually resulted in bullish continuation. We just got yellow below blue with the drop, so it'll be interesting to see if there's bullish continuation. Going back even further, yellow crosses over the blue, and there's a drop. So it looks like yellow over the blue is bullish for once. Yellow below blue is bearish. So anytime these moving averages touch, it looks like this one was bullish. So we'll put a green one here. So I think it's safe to assume, based on the history, that more often than not, when these moving averages get close together, there's going to be turbulence to the downside. I mean, that's not my opinion. That's just looking at the chart. Whenever the yellow and the blue, which is 50 and 100, on the 3-day chart, whenever they get close together, there's going to be volatility to the downside more often than not. Now, like what's interesting here, like I said earlier, is it happened pretty much in the same exact time frame as well, where well, actually, this drop has been significantly longer than the summertime. But if we go to this bars pattern and we're comparing the two, this is what I'm thinking we're at in something like this. So we are actually ahead of schedule here, which is interesting. But this drop was also a lot longer than this one, if that makes any sense. So it's almost like the time that's ahead here we made up for on this drop because this drop is a lot longer. So they're not going to be identical, but I do think if we are going to compare, we are somewhere in here. And what's interesting is I had that thought before. Well, I thought we were in here, but looking at this, when this yellow crossed below the blue, there was a drop beforehand, and then we went sideways and then moved higher. We just got that now. The yellow crossed below the blue, and we just dropped. So what's even more interesting is if we are looking at something like this and saying, okay, we're in September, the Dojlon-Mars theory, which I know everybody gets butthurt whenever I bring it up, but we were also looking at it on the live stream and saying, all right, well, if we're not here, then where are we? Like, we might even be here. And if you do cut this out and say, are we here? Actually, let's just move it to this. We are seeing that type of correction as well. So it is very possible that we are still in this summer type of move, because like I said, it's interesting that I looked at these moving averages curl to the downside, and the same exact move happened last time. They crossed, we had a massive drop. They just crossed again, we had a massive drop. So all in all, again, I was definitely overly bullish, to say the least, which it gets like that sometimes, and I really have to work on getting that. That's one of my many flaws is I get overly bullish. Um, but in terms of price action, in my opinion, any type of bullish argument gets invalidated below 41.5. I just don't see it. I mean, if you want to say 39, but I mean, at that point, you're basically back to the lows. So, in my opinion, this 41.5 has to hold. So, if we come back down and tag this 42.8 once again, so be it. It kind of has to bounce, in my opinion. but any lower than 41.8, and I just don't see a bullish argument. And I just want to make a video highlighting that I think it's interesting that every time there's a touch of any type of moving average on the 3-day chart, whether it be golden cross or bearish cross, they're all fucking bearish because, as history shows, whenever they come near each other, it's always more often than not, it's bearish. So it's something interesting to look at. I'm just playing around with the charts. But this is also a much cleaner chart than the other one that I have. Once again, there's so much confluence at this 41K range, so I would say anything below 41K, and we're just bearish as hell. 3-day MACD is flipping red, which is not a good sign. 1-day MACD is already red. 4-hour MACD is actually turning light red. So what we would really need to see would probably be another test of 43 and change, and then another bounce to the upside, which would flip this green. And then once we get this move to the upside, the 1 day would start turning light red, and then it would be a trickle down effect. But in terms of just pure support and resistance, in my opinion, what matters now is, in fact, this 41.5. So if we come down here and hold this 41.8 or 42.8 again, so be it. Again, the Bitcoin conference ends on the 9th. It might just be a dud, and it might be here for no reason, but I'm having it here for a sell the rumor, buy the news type of thing. We'll see if it plays out or not, but 42.8, basically here's another green box. But the only one that really matters here is this 41.8, because like I said, I said it a couple of days ago, I'm not really focusing on the short term anymore, which is why I didn't have, well, no, I've had this green box forever actually, but if you're zooming out, the macro 618 is, well, the real macro 618 is not on here because it's from the bottom to the top here, but if we end up going back down below 41,000, I just don't see how there's any type of bullish momentum. So all in all, keep an eye on 42.8. I guess since we're here and you're all here, if you're watching this long, I might as well draw something like this and say it's 43.2. So we'll put a line. Well, I'm not going to put a line here. We'll say 43.2 has to hold for confirmation that the bottom is in. Any lower than 43.2, and we're most likely going to make a new low and come back down into this box at 42.5. And then obviously this 41.8 or 41.5, in my opinion, must hold. There's no ifs, ands, or buts about it any lower than that, and I just don't see how we're bullish. So that's pretty much it. Best of luck. As always, none of this is financial advice, and you always have to do what's best for you.